Good morning, ladies and gentlemen. Today is October 4th, 2023, and I'm back with another edition of the live show. And lots going on. It's a crazy market lately, and as I'm sure everybody knows, interest rates are driving the whole thing, right? I mean, it's all you hear about now is the rise in interest rates, and it's really thrown a monkey wrench into the market, so to speak. The funny thing is like the fear and greed index is like, extreme fear and people are freaking out. Interest rates are the highest since, you know, some of them decades, but anyway, it's uh it's an interesting spot here, right? Long time ago. I don't even remember when it was that I originally drew all this stuff that you're looking at on the chart here, but resistance, support, major resistance zone up here, right? Major support zone right here that we're testing as we speak, and there's the 200-day moving average, which a lot of people I think are looking at and talking about, even though the market tends to overshoot, zigzag, bounce around the 200 day. But I guess, I was looking at this earlier today, and sometimes when the 200 day is kind of moving sideways, you get a lot of zigzagging around it, but it's actually sloping up now, so in theory it should act as some support, but quite frankly this whole little zone here is is like the major support zone. So everyone's trying to figure out whether the economy is strong or weak, and it's extremely subjective. That's why we're in such a weird period of time right now because everything is extremely subjective. Half the people say, yeah, look at the economy's doing fine, soft landing, lots of jobs, that type of thing. Yesterday, it was the jobs, I think one of the jobs numbers that really sent the market sort of reeling because the Fed, what it boils down to is the Fed done hiking rates, or are they going to hike rates one more time like they keep saying they're going to do? A lot of the Fed members are saying, yeah, they're going to hike rates again. And meanwhile, interest rates themselves just keep climbing and climbing and climbing, which is like inverse to the market now. So every tick higher that interest rates go, then the market's selling off. So pretty significant sell-off. I think that the Dow and the Russell went negative yesterday for a period of time, and so they're hovering right around negative year to date. S&P's still hanging in there pretty well as far as year to date gain, but anyway, I wanted to point this out because this trend line, which goes back to last October, so it's not quite. I guess mid-October is going to be 1 year from when we made the actual quote bear market low, and so I drew a trend line up from those two lows, and then if you zoom into where we are now, um, you can see that last week we had a test of that trend line. That was pretty. I haven't moved anything on this chart. I mean, this chart's looked like this for quite some time now, so it's kind of uncanny how this particular day we came down and like tested the trend line and the upper end of what I consider to be support. So there was a little gap right here that people were talking about getting filled in that, and so you can see kind of where I drew this support over here. But anyway, so yesterday everything was decisively bearish because all the headlines were that interest rates were tagging new highs and that type of thing, and so it's created quite a mess. So, and of course, it's the Fed's fault as usual. The Fed has just embarked on the the fastest rate hiking cycle ever, and so it's kind of creating havoc. But it's actually pretty amazing the level of sort of, you know, panic in the markets. I mean, you could feel it yesterday. You could see it. People were freaking out, sort of. And I mean, as usual, it seems to me like the market tends to be overly optimistic to the upside, and then people freak out when it like comes back down probably to where it should be to begin with. Right? Based on all the, you know, everything that's going on in the world and just the state of affairs. Um, it seems like this summer rally kind of was a little bit overdone, right? And of course, you know, there's always the idea that there's like seven stocks holding up the whole market, right? Roughly. So all the big mega cap stocks are really sort of holding things together, and we'll take a look at those in a minute. But as I've been pointing out here, and the other thing is like the majority of stocks are just not doing very well. I mean, there's tons and tons and tons of individual stocks that are just a mess. And I think I forget what the exact numbers are. I guess I could look them up here, but as far as like stocks trading above their 50-day moving average and that, so here's the Russell 2000, and the Russell 2000. I mean, look where this thing is now compared to like the bear market lows, just barely above it. And so, of course, I probably should have pulled up I have a chart saved over here. There it is. IWM. Yeah, so here's, you know, my support and resistance chart on IWM, and you know, there's seven stocks holding up the market, and this is, you know, 2,000 small cap stocks, and so you can see that it's kind of a mess. You know, they say the old adage, it's a stock picker's market. It's not really a stock picker's market, because if you're in the wrong stocks, then it's not been a good year so far, right? I mean, this is actually, you can see there's the beginning of 2023, and so you can see it went negative. It's extremely oversold right now. I mean, look at the move we've had from, I guess is that July? Yeah, well, no, the beginning of August. So it peaked like right at the end of July, and it's been a big sell-off. The funny thing is, it's pretty symmetrical. You know, you got this big peak, big run up, and a big peak, and then, you know, right back to where it came from, and then you got another, you know, peak right up here into this resistance, and then it back to where it came from, and then you've got another. So there's three big peaks there. But of particular concern is, and since these are spaced out so far, right? I mean, you're talking a year's worth of, basically a year's worth. And so, yeah, so this is a little bit concerning. Actually, a little bit. It's a lot concerning. I mean, it's just a mess. Um, there's so many stocks that look like they did during the dot-com implosion. I mean, there's just tons and tons of, and not necessarily little companies either. Big ones, big like sort of favorite growth names in that, just absolutely decimated. They had parabolic run-ups, and then they're all the way back down to where they were. But so anyway, Russell 2000 extremely oversold. However, um, you wouldn't want to. This doesn't look like something you'd want to try and catch a falling knife on. Although I would expect the overall market probably due for a bit of a relief rally. So here's your Nasdaq 100. It's got a pretty Nasdaq 100's actually got a pretty well defined pattern going on here. So it's going to be interesting to see. And of course, this is mostly representative of the mega cap stocks, and so you got kind of a channel going on there, I would say. Something like that, something close to that. So kind of at the lower end of the channel, there's some, you could take this and call it, support level here. Just kind of poke through support. If I had candlesticks, this would just be a little wick. So it's going to be interesting to see. I think, that sort of pivot low from last week, kind of important right here. So, the Nasdaq's having a pretty good year, and of course that's because of the mega caps, the Terra caps. Apple's looking a little dicey here. Um, same sort of thing. You could sort of draw a channel on here. There's that 200-day moving average, 50-day and 200-day. It's sandwiched in between. So it's going to be interesting to see, to see how this plays out. Microsoft, kind of hanging in there a little bit, but I believe I had a trend line drawn like that, and it broke it, and so now you got sort of a downward sloping trend line like that, and so I mean nothing out of the ordinary with any of this stuff. The thing of it is that it's a narrow and a thin, I won't say thin, but a narrow market, and everybody knows that, and so how these particular stocks perform is going to Tesla. I don't know if Tesla really counts as. I don't know if Tesla counts as one of the Magnificent Seven they call them now. It's way down off the highs. Kind of a messy chart. So, and then I believe Nvidia. Nvidia is one of the super important stocks to the market right now. A lot of that summer run up was sort of based on, the AI hype. And it's interesting because Nvidia seems to be holding that earnings gap pretty well. The thing about it is that the metrics on this particular stock, price to sales and PE and all the traditional metrics are kind of out the window. And so this is a pretty important stock to the overall market. I was looking at ARK because ARK is sort of my proxy for ARK's kind of and this is a crazy chart too because depending on how far you go back, totally different view. So to me this looks like, the .com bubble that burst, right? And maybe it is. So geez, I was seeing I've seen some crazy stats about this, but anyway, if you zoom in here, extreme volatility, it started the year at 30, managed to run up to 50, and then seems to have a lot of support. So, the over and under on ARK's $40. It's gotten pretty hit here since August too. You figure from 50 to 37.50. One of their, I don't really keep up with it, but this Zoom seems to be one of their largest holdings and one of the, like a Zoom meeting, right? Yeah, great idea, video conferencing, this and that, but boy, look at that. There's the parabolic run up I was talking about during the pandemic, and then this looks just like a chart of some .com stock back in 2000. This is what they looked like once they had parabolic run ups, and then they crashed back down to earth. And so interesting chart. The funny thing is when you look at it from this perspective, like what's happening now is just nothing, right? I mean, it's like flatlining. But when you start to zoom in, you sort of see that it's kind of got like what I would say is kind of a rounding bottom, but the volatility here is pretty wild. It really is. It's going to be interesting to see what ends up happening with this, whether maybe somebody buys them out or whether eventually it starts to recover. So, I mean, this right here, this choppiness and volatility is nuts. And look at it today. I mean today it's down, 3%. And so I just, it's tempting to zoom way out on it like that and say, boy, if this thing can get over $75, you know. Um, so I don't know. I mean, it's interesting. It's interesting to, I mean, other ones like this, PayPal. Probably look at weekly charts on a few of these. Yeah, there's just so many of these, and you wonder if, you wonder if there's like, potential for these things to recover someday. I don't know. I mean, that's one wacky looking chart right there. And so, there's just so many of these out there. I could go on and on and on, but these are not small companies. These were at one time, well, you can see the parabolic run-ups, right? The parabolic straight up run-ups. And then the subsequent crashes. So it's like we had another dot-com bubble that's already burst, but you certainly wouldn't be able to tell it from the Nasdaq. Um, the Dow is kind of in its own world, right? Dow Jones Industrials, basically, was right back at the all-time highs. It just barely pulled back a little bit. Um, I like looking at weekly charts. I actually like looking at monthly charts a lot too. Um, the Dow, the big news yesterday was that well, the DIA doesn't look like it went negative on the year, but it's close. So I think the symbol INDU is what they use for the actual Dow. And so yeah, if you look at the actual Dow, it looks like maybe it's flirting with negative territory on the year. Let's look at a weekly chart of that. Yeah, so there's the pandemic sell-off, the subsequent rally. There's the bear market. And it's amazing how, the bear market really started at the very, very beginning of 2022, right? Literally on like January 3rd, the market's made a high, and so, we're going on like 2 years. And so I saw something yesterday about the for the S&P. For the S&P, let me pull that back up here. Look at a weekly chart here. There you go. There's a weekly chart with my support resistance. Um, we talked about a cup and handle, so there's the big cup, and I suppose, I suppose if it doesn't just tank here, that it could theoretically, sort of zig and zag here. And I don't want to draw any more stuff on here, but there's a potential handle forming here, right? So, but anyway, what I was about to say is that in in order for the S&P to make a new inflation adjusted high, right? Like there's your 4800, 4818, whatever it was. All this time's gone by, and of course, inflation's been the big thing, and so this thing would actually have to hit about 5300. Think about that. The market would have to rally up to probably about 5300 to make an inflation adjusted new high off of that. That's something you don't hear much about. You always think in nominal numbers, but if you ever look at a chart of like Argentina or Venezuela stock market, you'll see that inflation adjusted, these markets go up. They have just insane inflation, and the stocks don't really keep up with inflation. See, that's what stocks are supposed to keep up with, and over the long term, like beat inflation. So anyway, right now the big thing everyone's watching is this TLT, and from what I gather, And I mean, this is just incredible. Look at this latest sort of waterfall sell-off. So this is the 20-year Treasury bond, and this is an ETF that you can. But people are trying to buy this thing. Um, People are trying to buy it because, in theory, it's supposed to be pretty. The 20-year Treasury bond is supposed to be pretty safe, but as interest rates rise, this sells off, and man, this is just incredible. There's a weekly. Um, and so, I saw something. Look at that. That is just amazing. So, the big question is, bond rates have been going down since what, the 70s? Like interest rates have been declining since the 70s, right? That whole inflationary period and all that stuff before I even remember. I don't remember much about it, but interest rates were crazy. And so, it's been sort of an entire generation. Interest rates have been coming down. And now, of course, that's all sort of flipped around. And you can remember how long the Fed held interest rates, some say artificially low. And so now they've created a monster because by holding interest rates artificially low and increasing the money supply, they let the inflation genie out of the bottle, and now it's very difficult to put it back in. And even if the reinflation rate goes to zero, the price of everything is going to remain elevated. So they really created a monster, and it's a mess. And so these are the sort of repercussions that are happening, and it's just this sell-off here, which is kind of crazy because I mean, if you look where this is now, it's just, well, I guess that's a long time ago, right? This is a weekly chart, but anyway, the stock market itself these days seems to be moving sort of like, inverse to or I'm sorry, in lockstep with this, right? So the opposite of this is TBT, right? That's the Well, this is ultra short. I guess there's so many of these things, but I guess the Vanguard Total Bond Market ETF. That's probably the best thing to look at. When did that thing start? Wow, 2007. So there you go. Interest rates have been declining and declining and declining, and there's your pandemic, right? They slashed interest rates to zero, and so interest rates are kind of normalizing. With interest rates normalizing, if that's what you call it, it's just creating havoc in an over-leveraged, debt-ridden, I should say, debt-ridden society. So it's just a mess. You know, mortgage rates are at, like, I saw somewhere today, I think it said 2007. Like, mortgage rates are the highest since 2007. That was a long time ago. Um, and so, the housing market, and especially the commercial real estate market, is what everybody's concerned about. And of course, the banks. Um, it's just so funny because back in the day, it wasn't that long ago that people thought it was normal for interest rates to be, nothing. And there was, they pretended or acted like or thought. I remember Larry Kudlow said interest rates will never rise substantially in his lifetime. Greenspan, famous quote. He said interest rates, he said that I guess he was talking about the long bond would never trade above 4% again in his lifetime. That was Bernanke said interest rate, and so he said the world had changed, right? And so here we are. Interest rates all of a sudden, at 5% interest rates, it's just creating havoc across the globe, I might add. So there's a lot of turmoil out there, and it's all because of, and so you wonder, where were the bond vigilantes? Where were the bond vigilantes before? How did they let it, get so insane? So, Anyway, as we speak here, as usual, the market tried to sort of rally up this morning, right? Like they ran up the futures in the overnight session, and it tried to get some. We see this a lot lately. Is the market tries to rally, right after the open, and then it just sort of, you get into, an hour or two into trading, and then it just fails, and we go down again. So there's that 200-day moving average. You can't really see it on this chart, but let me pull this up here a little bit. There we go. Look at that RSI. That RSI is really extremely oversold. And so just like when the RSI was overbought here, you can see it coincides with actually this one. The RSI was extremely overbought. And it just sort of coincided with the little sideways action. But something I wanted to point out on this chart here. Do you remember this day right here? Um, Shortly after this day or right around this day, I don't remember if I was doing a show, like what day of the week it was, but that was the big sort of warning shot across the bow. That was, the outside reversal. Um, that right there was anybody that, and bearish engulfing candle, outside reversal, probably all sorts of names for it, but it was almost so obvious as to be too obvious, right? That was a reversal day, and so it was just textbook. It was the sell-off that's happened after that is sort of, at least the initial sell-off was textbook. What wasn't really textbook was the following three sort of inside days there, like the following day gap up and that was kind of unusual, but at the same time, um, that was just a textbook reversal sort of pattern, and ever since that happened, you can see. Right around here, everyone was basically certain that the market was about to, at least retest the highs, right? We're so close, but again, there was that sort of that band of resistance there, but at this point here, it wasn't really a stretch to think that we'd bounce around a little bit and come up and at least retest those old highs. So pretty amazing, actually. It's a pretty amazing what's transpired, and of course, they're on CNBC talking about the utilities, and yeah, this rise in interest rates. Look at this. Typically, utilities are safe, widows and orphans, safe haven. You put money in there, you collect a dividend. So, um, yeah, pretty amazing. Quite frankly, um, the rise in interest rates is throwing a monkey wrench into a lot of stuff, and so um, I don't really follow a lot of this stuff. I was trying to think of like a REIT or something. So here's a REIT. What a mess. Anyway, it's interesting to see the pandemic on these interest rate sensitive sectors. So, but all in all, I've been talking about this for a while, is the fact that actually this weekly chart is a pretty good view here. This the fact that the Russell 2000 is made this sort of triple top and is down here just barely hovering over the bear market lows. That's kind of the thing that illustrates to me the underlying health of the market. And so it's going to be interesting to see what happens from here. And quite frankly, it's hard to say. It's hard to say what happens from here. I would think that the S&P is going to find some support here, but hey, you never know. It's October, right? We broke this trend line. Um, there's always back in the old days, times are a little bit different now, but back in the good old days, you'd get a sell-off like what we've seen here, and typically, it wouldn't end until you got some sort of a capitulation sell-off. And so, maybe we'll see that. Maybe we'll see a capitulation sell-off before this ends. But it's been sort of one of these sell-offs where, and especially just the past couple weeks, where nobody could kind of believe that, that we're really selling off like this. But then again, the S&P's only 12% from the nominal all-time high, roughly, and it's just back to where, back trading around where it was, in the spring and at the beginning of the year, and so, it's hard to say. It's hard to say, but this trend line right here getting violated is a little bit of and sometimes, they'll overthrow it and bounce back up, so. It's definitely, I'm going to extend this trend line out a little bit because all of a sudden, that sort of support level, and quite frankly, it's, well, I had to save that since I extended that. Quite frankly, this sort of hit, is that a head and shoulders? I don't know. That's a topping looking pattern. It's pretty ugly. That's a pretty ugly pattern right there. And so, but we've entered the area here where, it's sort of the market's going to need to consolidate, rally back up. But then again, all of a sudden, these areas that, especially this one that was support, is going to be turned into resistance. And so we got, that was the big support zone. Now we got resistance overhead. You got the 200-day there, all this good stuff. This support zone could probably get extended down a little bit more too, because you got a lot of consolidation sort of in this area. So everybody's watching 4,200. I think there's, from what I gather, there's a lot of buyers. There's a lot of buyers at 4,200. So I would expect things to maybe stabilize, but hey, you never know. Something, you hear a lot about the interest rates rising like this, like something could break. So let's hope that doesn't happen. But anyway, good time to be really super cautious right now. And so I guess we'll just wait till the end of the week and see how things sort of shake out. So, well, hey, thanks for joining me. I'll be back again next week, same time, same place.